In today's lesson, we're going to be talking about the double bottom. Now, the double bottom is a bullish reversal chart pattern, and it looks like a W, just like that. We have the first bottom and then we have the second bottom. So the stock trades down, makes the first bottom, goes up, forms the middle high, and then it makes a second bottom. So the bottom is about the same. Sometimes it could be a bit higher or a bit lower. And we're going to learn how to trade this pattern and also learn how to spot this pattern. Now in this chart, we can see that Bank of America had a decline and then it formed a double bottom chart pattern. It's fairly easy to spot, and many stocks that form this double bottom actually have a very good chance of going back up, and for traders you can actually trade the stock. AMD also formed a double bottom. As it drifts lower, it makes a low here, goes up, and then makes a low which is about the same area as the first low, and then it shoot back up. Now, how do you trade this double bottom chart pattern? First of all, you must look for a double bottom that looks like a W. Once you are satisfied that there is a double bottom, you will look to buy the stock when it trades above the high of the middle here. And you can put a stop loss below the low of the entire pattern. Whichever the low is lower, just put the stop loss there. How do you get the target? You take the height from the lows to the middle here and then project it upwards to get an initial target. The target can be initial, but that doesn't mean that the stock will stop running there. There are many times when the double bottom ushered in a new uptrend and the stock can go even higher than the initial target. Let's take a look at another example of American Tower Corporation. Stock moves down, sideways, and then moves down again. And then it forms a double bottom chart pattern. How does the trader buy this stock? They buy it the moment it trades above the highs of this middle. And I think there are many people who saw this pattern because there is a large bullish green bar with a large volume. And you can place a stop loss here at the second low, or if you are more conservative, below the first low. And the initial target, you take the heights of this pattern and project it out from the breakout to get a target around here. But as you can see, the stock can move even higher. Therefore, this is a very rewarding chart pattern to trade. Now here are some tips for high probability trades. I have 3 tips for you. This is a Bank of America which we saw just now. Now number 1, if you see a double bottom happening, try to look for a bullish divergence in indicators. You can use indicators like the RSI, the stochastics, or the MACD. Here I have with me in the chart MACD 1226.9. You can see Bank of America make a low here and then it move up and even make a lower low, but you can see the double bottom here. Now while the stock was making a lower low, the indicator was actually making a higher low. You can see a lows here, but the MACD lines were making a higher low. So we call this a bullish divergence, and this will give us a higher probability trade. Secondly, you want to look for the stock to trade back above the 20 period moving average, which is this red line. When the stock is below the 20 period moving average, short term we deem it to be bearish. But when it goes back above the 20 period moving average, short term it becomes bullish. So second point is we want to see the stock trade back above 20 MA. Third tip for high probability trade is we want to look for a break of a downtrend line. You can connect the highs, as many highs as possible, to form a downtrend line. When the stock breaks above the downtrend line, it signals a trend change. Now here I will teach you two ways to enter. First is the traditional way, where you trade above. When the stock trades above the high of this middle, you buy the stock around here. Here we have already three criteria of high probability trades being satisfied, which is why the stock moved higher. Another way to enter early before many people is to enter the stock when it trades above the 20 MA. But in order to do so, you must anticipate it before this stock completes the double bottom chart pattern. To do so, you will need the bullish divergence. Then you buy the stock when it trades above the 20 MA, which is around this area. Now, one of the ways to take profit when after you enter the trade is to use a trend following tool like the 20 MA. Here we can see the stock kept moving higher until it dropped below the 20 MA. If you have bought here, you can have ride the stock higher until it drops below the 20 MA, then you take your profits. So I hope that this lesson has been helpful. If you find it helpful, please like and subscribe to my channel for more education like this. And I'll see you in the next one.